Good morning, everybody. You're welcome back again to another edition of our weekly webinars. Today, I'm working from home. I'm working from not home precisely. I'm just working from my office. So, pardon whatever background noise you may get to hear. All right. Let's just concentrate on why we're here. So this morning, like I promised the last time, we're going to be talking about Fibonacci principles and Forex. All right, we're going to be digging deep um, into trying to understand what exactly is the Fibonacci. All right, we'll be talking about what exactly is Fibonacci. We'll be talking about what makes what makes it important, what makes it crucial. All right, what makes it worth learning. All right, we're going to be looking at what exactly makes it worth learning. And then we're also going to be talking about how to apply this tool, how to apply this knowledge in a practical trading scenario. All right. So these and many more are the things that we are going to be examining together. And I can promise you that it's going to be yet another amazing session. All right. It's going to be yet another amazing session today. I don't know if we have other people that we are expecting, but I don't want to take too much of our time. I want us to dig right into what I have in store for us for today. All right. I don't want us to take too much time. I want us to just dig right in and then eat the jackpot straight up. So today we're going to be having about 2 or 3 sessions as usual, so that we can have some time to go on a slight or a light break to just grab some refreshment. So having said that, without further ado, let's get into it. So I'm going to be starting with a whiteboard, right? So we're going to be talking about Fibonacci. So we're going to be talking about Fibonacci principles and Forex. And before I show you what Fibonacci principles and Forex is, or before I explain to you the importance of the roles of Fibonacci principles and Forex, I'm going to have to first of all show you what Fibonacci is. All right, I'm going to have to first of all discuss that with us, or to talk about that to us. All right, so I'm going to just go to a chart right now. Um, this is, I'm going to be showing us something from Wikipedia before I break it down with further explanations. All right, so this is a Wikipedia source. All right, I'm already giving credit to my source, so it doesn't look like I stole information from a place, or I plagiarized. All right, so this is my source for the explanation or the definition of Fibonacci. All right, so Fibonacci sequence, Fibonacci numbers commonly denoted as F with a subset N. All right, each number is the sum of the preceding ones, starting from 0 and 1. All right, so if you scroll down, you see that the Fibonacci sequence begins with 2 numbers, 0 and 1. All right, and every other number in the sequence is an addition of the previous 2 numbers. Okay, I know you are not seeing what I'm sharing right now. All right, you're not seeing what I'm sharing right now, and that's because it's not my intention that you see it. All right, I just wanted to know that it's a Wikipedia source. All right, I want you to know that it's a Wikipedia source. So I just read clearly from Wikipedia. So what Fibonacci numbers are, or the Fibonacci sequence, is a sequence all right. So the Fibonacci sequence is such that it's a sequence of numbers, all right, where each number is a sum. Each consecutive number is a sum of the preceding numbers, of the two preceding numbers. Oh, I spelled my starting wrong. Pardon me for that. Feel free to correct that in your minds. It's an honest typo error, all right? It's an honest typo error. But having said that, let's proceed. Having said that, okay. Having said that, all right. So having said that, let's start. So if we're talking about the Fibonacci sequence, it means we're talking about numbers such as 0, then 1, 0, then 1. All right. So if we have 0 and 1, what is the next number in this sequence going to be? I need you to drop that in the chat box so that I know that we're following. We have 0, we have 1, and those are the two numbers that start the sequence, the Fibonacci sequence. So what's the next number going to be? If the sequence is such that every consecutive number is a sum of the two preceding numbers. So what's the next number in this Fibonacci sequence? What's the next number? Please drop that in the comment section very fast. All right, good. So that means you're not following, because right now we have two numbers in the sequence. All right, we have number 0, we have number 1. All right, and if we had number 0 and 1 to each other, what we have is 1. Do we get that now? Is that clearer now? Is that clearer now? Please let me hear your views in the chat box, please. All right, good. So we have numbers 0, 1, and then 1. All right. So when we had 1 and 1 together, the next number we have is 2. All right. The next number is 2. All right. And then when we add 1 and 2 to each other, the next number is 3. All right. And then when we add 3 to 2, all right, when we add 2 and 3 together, the next number we have is what? What's the next number we have? Please drop that in the chat box quickly. What's the next number on this sequence supposed to be? Beautiful. So, and then the next number is 8. Then the next number is 13. Then the next number is 21. Then the next number is 34. All right. Then the next number is 55. All right. So do we all understand how the Fibonacci sequence is arrived at right now? Is that clear enough for everyone? If that's clear, I need you to type in the chat box. I got that. I got that. All right. So let me know that it's clear for every one of us. All right, beautiful. I'm keeping my eyes on the chat box. Keep your responses coming. Beautiful, beautiful. All right, so having said this, all right, haven't come to understand that this is what the Fibonacci sequence looks like. All right. It means almost, it means that for almost all randomly occurring sequences, all right, for almost all randomly occurring sequences, because if you look at this number, all right, those of you that are familiar with mathematics, you know that we have prime numbers, we have even numbers, all right, we have prime numbers, we have even numbers, we have odd numbers. All right. Now, if you look at this sequence that I have on my screen, all right, if you look at that sequence that I have on my screen, what you will observe is that we have prime numbers. And prime numbers are numbers that can only be divisible by 1 and themselves. All right. Such prime numbers as 1, 2, 3, 5. All right. 13 is another prime number. All right. So we have these prime numbers. All right. And then at the same time, we also have an infusion of even numbers. All right. We have 2, we have 8, we have 34. All right. And then we have an infusion of odd numbers, which are numbers that cannot be divisible by 2. So we are having numbers such as 3, 5, 13, 21, 55 as odd numbers. All right. And because Forex is strictly a numbers game. All right. I need you to understand that carefully. Forex is strictly a numbers game. All right. And because Forex is a strict numbers game, all right, it means that it has to be made up of either of these 3 sequences. All right. It means it's got to be made up of either prime numbers, even numbers, odd numbers, or a smooth blend of all 3. If we understand that, if we understand what I've explained to so far, all right, if you got what I've explained so far, just drop an emoji in the chat box. Let me know. Drop an emoji in the chat box. Let me know that you got that. Beautiful. Good. So since Forex is a numbers game, all right, and virtually all numbers can be classified into these 3 classes, all right, virtually all numbers can be split into these 3 classes. So it means that every category of figure, all right, every single category, every possible category of numbers is already represented in the Fibonacci sequence. All right, it's already represented in the Fibonacci sequence. And that becomes a strong leverage, all right? It becomes a strong point for us to begin to consider how then does this apply to the financial market, all right? Since we already have clear indication that you cannot talk numbers without talking Fibonacci, all right? I don't know if we understand that, but please, I need you to follow me closely. I believe that you're understanding what I'm saying, but please still follow more closely. All right. It means that it's impossible to talk numbers without talking Fibonacci, because any number that you want to mention is either a prime number, an even number, or an odd number. It cannot be anything outside these 3 categories. All right. So since Forex is a numbers game, trading is a numbers game, that simply means that anything that has to do with Forex has to, in one way or the other, has to some extent, react to Fibonacci levels, all right, or to Fibonacci sequence, or to Fibonacci in that sense, all right. And it's on this premise that, okay, PB, you have a question? Mr. Paul, you raised your hand. Do you have a question? Please, if you have a question, let me know in the chat box whether or not you have a question. Oh, okay. All right, thank you. So when we come to understand this, all right, it forms the basis for our understanding, and that's why every trading platform comes with certain tools, all right, comes with an inbuilt a number of inbuilt tools, all right, comes with a number of inbuilt tools called the Fibonacci tools. All right, so we have Fibonacci Retracement, we have Fibonacci expansion tools, and then we have one of the more unpopular tools that are based off of Fibonacci levels are called pitchforks. All right, there are quite a number of pitchforks. We have Andrew's pitchfork. All right, we have shifts. We have quite a number of them, all right? We have quite a number of pitchforks. But today we're not going to be talking about pitchforks. We're not going to be talking about Fibonacci retracement tools or expansion tools. I'm just going to be showing you the platform that Fibonacci tools are based off of, all right? And then I'll just show you brief examples of how Fibonacci retracement and Fibonacci expansion tools works in the market, all right? How it works in a live market scenario. All right, so I'm going to be doing that in a while, in a little while from now. I'm going to be doing that a little while from now. But I don't want us to get distracted or carried away. And that's why I'm going to be trying my best not to give us too much information than necessary. All right, I want to ensure that everything that I am going to be showing us today are as simple as possible, yet as effective and efficient as it could possibly be. All right, so having said that, let's quickly head over into understanding how these things affect us. All right, so if you draw a Fibonacci retracement tool, I'm going to be sharing a screen where there's a Fibonacci retracement tool in a while, a little while from now. Okay, I'm trying to look for a chart, a commodity that I can use for. Okay, beautiful. As some of you may already know, I am a synthetic indices trader. I trade synthetic indices majorly. All right, I trade synthetic indices majorly. So, pardon me if majority of my examples or majority of my charts are charts from synthetic indices. All right. So, I'm going to start sharing my screen so that I can show you. Okay, 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 okay. Screen to. Okay. I want to believe that we can see what I'm sharing, but in the event that many of us cannot, let me just drag that here. I want it to be easier for me to move in between screens. So um, let's have it like this. All right. So please, if you can see my screen, just let me know in the chat box that my screen is clear enough for you to see. All right, beautiful. So I want to believe that we can all see the chart I have on my screen right now. All right. And then one thing you observe about this chart is that we had a bearish momentum up to this point, which I'm going to mark with a box. Let me quickly add a box right now. Okay, so our bearish momentum ended here. And the reason why it ended there is because we made a lower high, all right, but a higher low. All right, so at this point, we had structure becoming invalidated. The market structure became invalidated. For those of you who may not understand me, please just hold on. You can peruse some of our other YouTube videos where I talk in depth about market structure. All right, I have taught some in-depth webinars on market structure, so you can go through those videos and then it will give you an understanding of what it is that we're looking at. All right, so right now this is a Fibonacci retracement tool. As you can see, this is a Fibonacci retracement tool. So I'm just going to drop it on the chart. And what I just did with it is that I just measured this impulse. All right, I just measured this impulse. I just measured from this low, all right, from this low to this high, all right, from this low to this high, all right. And then what you observe is that at the point where price touched these levels, all right, at the point where price touched, for example, it got air, all right, touched this level, retraced, touched this level, retraced, touched this level, retraced, all right. At the point where market touches those Fibonacci levels, you discover that there's some basic reaction at that point. I'm going to take another example now. If you want to know exactly how I use my Fibonacci levels, because if you're seeing my Fibonacci right now, you see that I don't have figures on my Fibonacci. I only have names. I have tags for my Fibonacci, and that's because I don't use the regular Fibonacci that other people are familiar with. All right, my Fibonacci levels are pretty custom made. So, but this is just the basic explanation. So I need you to understand that. So you observe that after this impulse, after this swing, all right, market came down here, all right, touched the Fibonacci level, went up, came back, touched the Fibonacci level, went up, came back, touched the Fibonacci level, and then reacted. All right, so when we talk about Fibonacci levels, it's usually things that define to us the, how do I put it now? Things that define to us possible regions where price is most likely going to test. All right, it shows us possible positions price is possibly going to get to. All right, so from here now, I'm going to quickly use an example to show us by adding a Fibonacci expansion to this chart. All right, if you look at it, don't forget, this is the move that we're using. All right, this upward move is the move that we're using. All right, if you can see my screen, please let me know in the chat section. I'm talking about this particular screen where I have my Fibonacci drawn. All right. Okay, beautiful. So having shown us that, this box that I drill, all right, this vertical box that I drill, all right, I'm using it to mark the impulse that I'm using for drawing my Fibonacci retracement tool. All right, remember, a retracement simply describes the smaller moves that the market makes in an overall trend. All right, if you recall correctly, I was showing you that market moves in waves. All right, I showed us that some time ago, that market moves in waves. All right, and then I was showing us that there are impulse motions. All right, there are impulse motions, there are Um, and then there are retracements, all right, or corrections, all right, according to Elliott's wave, all right. So this move, this kind of move is a retracement, all right. This moves that I just marked with my rectangle tool, all right. Those moves are retracements that occurred within an overall uptrend, all right. Those are retracements that happened within an overall uptrend. So this is our overall uptrend, all right? That's our overall uptrend. But we have these retracements happening along the line. Okay, so what we use the Fibonacci retracement tool to do is to give us possible regions, all right, to map out for us possible areas where price would most likely, where the retracement would most likely end, all right? That's what the retracement tool does. That's what the Fibonacci retracement tool does, all right? So I'm going to show you something. Remember, these lines that I drew just now, I drew them completely random, all right? They are complete random drawings, all right? But even as random as it was, if I mark it out with a Fibonacci tool, all right, you discover that the movement, ended at a Fibonacci level, all right? You touched the Fibonacci level and continued moving upwards, even though this was just something that I drew completely off the top of my head, all right? I drew it completely off the top of my head. No measurements involved. It was just random, all right? And then you see that even this other one too touched the Fibonacci level and then bounced back up, all right? So Fibonacci retracement gives us an insight, all right? It begins to give us an insight into possible regions where markets would, where retracements would come to an end, all right? It shows us possible price regions where a retracement move is most likely going to end. All right, definitely, Mr. Paul, you will definitely get it. Definitely. I just got your message. It's no problem. It's no problem. All right. So if you understood what I've explained so far, if you can understand what I've explained so far, please kindly let me know in the chat box that you understood this. Because I'm still trying to lay the foundation. So I want to be sure that we're all on the same page. Do we all understand? Is there anybody having any issues or any questions? If you have any questions, please let me know in the chat box that you have any issues whatsoever, please. All right, beautiful. So remember, we're still trying to lay foundations for this thing called Fibonacci. All right, we're still trying to lay foundations for this thing called Fibonacci. So Fibonacci principles in Forex trading. So right about now, we are going to be going for our very short break. All right, we're going to be going for a very short break. We'll be back in the next, all right, we'll be back by 12 o'clock. By 12 o'clock, we'll be back to have our second session. So we're going to be taking a 12-minute break. Use this as an opportunity to invite your friends. Use this as an opportunity to bring on board any of your folks that might be interested in Forex. Please, these values that I'm giving out are too good. They are too good to be, how do I put it now? They're too good to be limited to such a short or to such a small circle. All right, I'm dishing out top-notch quality, and I would appreciate it if I could have some more encouragement. All right, if there was some more attendance, all right, it will give me the required momentum to be able to show you all of the nitty-gritties of these things. All right, because I also need encouragement. I'm human. All right, so please use this short break as an avenue to do some amazing publicity. Let your friends, your folks, let them know that something big is happening here right now. Let everybody come on board. It's going to be an amazing second session. All right. So until I come your way again for the second session, I am still your friend, your brother. I am still Adetola Freeman. I am a Forex coach. I am a Forex mentor. And above all, I am a human being. All right. I am flesh and blood. So see you in the next session. And please do have a lovely break because I definitely will. All right. So until the next one, please take care of yourself. By 12 o'clock, we'll be here.